Right, good morning everyone, Richard here and welcome to the Friday edition of the Ninjacators Morning Bell. Alright, latest job numbers were just released 15 minutes ago. Again, pretty resilient job market, higher than forecasted, pretty much in line with the previous figures, although the unemployment rate went up by 0.1%. So yeah, the job market's still staying very resilient. I think the idea that the Fed has is they want to see a cooling job market first. That could then potentially help ease inflation and influence their future rate decisions. So, yeah, still pretty strong figures there. I think the last time that these numbers came in less than forecasts was, in April. So it's been a good 7 months now, 6 months or so, a very strong job market, right? So obviously we also had a 75% basis points increase in the interest rate on Wednesday that the Fed announced. So the markets didn't like that. They were moving lower, or they moved lower on the ES and the NQ as well. Pretty strong declines there, and this also after what I've said could have been a WXY corrective pattern to the upside. So it does look, and I think the NQ looks even worse than the ES, very close to its lows. We'll look at the NQ after the ES, obviously, but not looking good, but sort of in line with expectations, right? Been saying for a while that we were going to expect potentially a bounce from an area we identified before. We got that. Now whether this retracement was it, and then we're now going to get this final sort of leg down to the downside, it remains to be seen. But we did look at this pattern, or what I still assumed was a corrective relief bounce to the upside, and mentioned that it potentially was an ABC X ABC, i.e. a double zigzag. So now the question is, with these job figures still pretty strong, how's the market going to digest that? Price is currently pulled back into this purple line, which is that center median line of that long-term pitchfork that's been on a chart since we started these sessions. You can see previously where price bounced from it, pulled back, sort of vibrated up and down, again reached the second time this low red median line of this green pitchfork that's been tracking this entire decline to the downside, shift pitchfork setting I should say. Strong bounce again to the upside, and now the question really is, was that it? It very well could have been, and then we potentially now could see the final leg lower. So let's quickly talk about what would happen if price moves back up again. Before we do that, let me just get my volume profile out again. You see a lot of these previous zones that we have here, the red ones, I drew manually. They weren't drawn automatically by some sort of indicator. Were pretty much previous peaks in the volume profile during this decline. It started on August 16th, or 16th of August till the 13th of October. So you can see how price previously sort of tested volume, declined. As soon as went into a void, also clearing this lower green median line, moved to the next one. Resistance, found support again at the median line that it just broke, and moved higher. It failed to actually make it into this area on the upside, where we have another median line sloping to the downside, but from a pattern perspective, that might very well have been the end of a corrective move. Now I did say if price should move up or continue to move higher, instead of obviously breaking those October lows, then we'll now look at what that might suggest. But in any case, it looks like a beautiful, I've been saying this for most of October, an ABC, X wave, another A, a B, and a C. Even this final potential C wave here completed in a nice 1, 2, 3, 4, 5 wave move. So either corrective pattern that ended and that's it now, and we can see another strong decline as expected, right? But now obviously the main question is, are we going to see that decline now rather than later? So I think we'll only really be, confident that a correction ended here. If price were to move lower below this purple median line, remember from that long-term one, which is now currently acting as support. So a close below there and a close below this previous low here would really make me think that that was the end of a corrective move. All right, and that prices can then at least test these lows set in October and even go much lower. Remember, in the bigger picture on the ES, I'm also looking at this entire move lower as a potential corrective pattern that is incomplete. Also a double zigzag, a very complex one, where the first ABC ended here in, what was this, May, followed by an expanded flat WX wave, and that we're now potentially seeing or have seen the first A wave, that this was some sort of a B wave, and then we're going to get a final C wave of the secondary ABC to potentially complete the whole WXY or double zigzag pattern. Again, potentially all the way down here at 3,136 to the upper sort limit at 3,324. Still a far way to go, but you've probably noticed that if things do get volatile, they can move really, really fast, these markets. So that's still the thinking behind everything. Question now is just, was this the end of a little bounce, or could price actually move higher? And again, I'm going to and through between a daily and a 4-hour chart here before I switch to the NQ. There's also a chance that this was, let's say, a 1, 2, 3, and now we have some sort of aggressive fall and then a fifth wave to complete an A wave, then a corrective move, and then another large move back to the upside. But, you know, with these inflation figures that came out, the interest rates obviously being, not the figures coming up, but interest rates getting aggressively hiked again. Strong job market now, it just really needs to be seen what's going to happen, which of these levels are going to get broken. So current support, the line in the sands, should I say, in two sort of areas would be 3,710, which is where price just reacted from at that centimeter line. Look how that purple line, you know, how beautifully touched it to the T and moved higher. So we can call it what 3,710, 3,711-ish. And on the upside, we have this median line, the green one, sloping to the downside around 3,796. So we might see price bounce around here, or whatever the case might be. But if it does head higher again, then this was not a WXY pattern, and we might have to start thinking that this was some sort of a leading diagonal corrective move, then another wave to the upside. But still, like I said, in the bigger picture, whether we go higher or lower from current prices, still expecting these lows in October to be broken at some stage. All right, let's proceed to the NQ. Guys, as always, if you got any questions, please let me know. Drop it there in the chat box. I'm also streaming to YouTube, so more than welcome to ask me anything that you would like to ask, obviously market related, right? Okie dokes, let's go to the daily on the NQ, and this is what I meant by the NQ obviously being much weaker than the ES. Look, they'll all follow each other in direction eventually, but spate of bad earnings reports from big tech companies has really been weighing heavily on the NQ. And now charts lagging again, always an issue with NQ once I load that in NinjaTrader. But anyways, we had a zone here, price bounced up. On the NQ, way more resistance on the upside. We identified a potential resistance area between 11,505 on the lower end to about 11,662 on the upper end. It was tested once, moved into the zone, and tested again, and then obviously failed. Moved way stronger to the downside and came very close to the lows that were set on the 13th of October. So yeah, also potentially had some sort of an ABCX, I don't know, ABC. It doesn't look as clear as on the ES. Again, price might very well find support at current levels, but it's sort of made its way below the support area that we've had previously. And also the support area is where we have multiple market geometry lines running at different angles crossing each other. And that's pretty much how I always come up with these zones, and they really do act as good support and resistance areas. So yeah, this whole entire area now could potentially turn into resistance unless price makes it above here on the NQ, closes on the daily above here, then I would say potentially making another move back up. But keep an eye on where the NQ is currently within this zone, again to about 10,764 to 10,942. Another rejection lower, and then I think there's a very good chance that those October lows will get taken out. And I actually have to update this zone. And then the next area of support, potentially within where these other lines cross each other. And the one sloping up is the low red warning line of a long-term pitchfork, similar to what I've done on the ES. And then this line crossing down to the downside is also a low red warning line of a downward sloping pitchfork that's been tracking this entire move that I'm still seeing as corrective in the bigger picture on the NQ. Alright, you can see also a beautiful example of what happened by selecting 3 anchor points to draw a shift pitchfork prior to price reaching a very extreme point, and especially in angular support and resistance. These red warning lines, you see this is the lower one here and there's an upper one up there, tend to catch very extreme moves and act as very strong support. So previously price here just missed it in October, in about mid-October. So if the NQ were to continue lower, which it currently looks like it wants to, obviously, then I think there's a good chance that price will then reach this lower red warning line again, perhaps go as low as this one that's sloping to the upside. So let me just identify that zones, put some price to the areas, and obviously this will change because there are sloping angles. As time passes by, these lines will stay static, but we'll have to potentially update the zone. So towards the lower end, we're looking around about 10,000 as support, and towards the upper end about 10,219. Let's call it 10,200. So yeah, it's we'll have to wait and see how the end of the day plays out. Potentially Monday, see if prices actually close below this area, and then revisit the ES and the NQ, and yeah, give you guys new projections potentially where things might be going. But in a bigger picture, still moving lower, and price has followed those projections pretty well. So that's still my expectations, lower prices on the indices. All right, let's move to crude oil. All right, obviously it looks very meshy, a lot of lines here. If you're new to these sessions, we've had this sequence. Sorry, let's talk about when price made these massive extremities over there. Obviously, in the beginning of the year, in March, price reached an upper channel line, which was basically projected to the upside. First, I drew a channel that I've had on my little charts for more than a year now. Going from these lows when prices went negative in 2020 to a low here in, when was this? What's it, December? Yeah. 2nd December 2021 to this high in March 2021. Alright, and then you just go like this, control paste, and you paste the same angle, same width to the upside, because market geometry tries to expose the symmetry that's prevalent to markets, if that makes sense. Alright, so this price move failed to break, well, it did break above there, but it failed to close. Moved lower, it found support at the same lines a few times, although it undershot each other. Moved up, down, retested beautifully all the way down until it reached this lower channel line again. And that was this area where we had confluence between that upward sloping channel and this lower median line, this green one. And we had this on our charts for a while prior to price reaching there, and also saying that if we've seen a 5-wave sequence into that area, then that could potentially mean that we've been seeing a leading diagonal, and that was potentially a really good area or zone for a bounce to happen. And it did. And where did it pull back into? Straight into the center median line. Center line of the same channel to the T, got rejected. We even tracked on a smaller time frame where we think price might potentially find support. We used market geometry on a smaller time frame. We had a beautiful little zone there. Price reached it perfectly and bounced back up. And this is how you can swing pitchforks in different directions. I'm assuming that what we're seeing here is potentially corrective in nature after a 5-wave sequence, and that wasn't complete yet. So we could still be seeing something like this, or potentially even higher, and then get a move down again. So we sloped a shift pitchfork, or I did, sorry, to the upside, and we could see clearly how these median lines, by just selecting what we call an action and then a reaction in the market. And this is how these lines work. You're looking for an action, and I would take 3 anchor points, 1, 2, 3, and then you have a reaction. So we had a center median line resistance, pulled back to this dash median line, tested again, and this was Wednesday when we looked at things. We had to see price moving lower again. And for a while we've been saying that we want to see a break above this center median line. It's obviously acted resistant twice, and today it looks like it's going to clear around 90.73. Even if price were to pull lower today, then keep that level in mind, around 90.73, 90.50, around about there. So we were waiting for price to break above there, and if that happened, obviously a really good chance that these highs will be tested. It was set on the 10th of October, and potentially seeing price now moving into, and I should update these lines again. I think at the minimum, and I should even go higher here, making anywhere into 94 till about 97.30, 97.5 sort of area. Quite a wide zone, but if this is corrective, which I still think it is, then like I said, potentially just dealing with a single zigzag, A, B, potential C. Now your C waves, quite often in a single zigzag, travels the same distance, or in most cases, than your A wave. Not always, but just a rule of thumb. So that's what I'm saying. I think at minimum price could make it within this range, potentially even extending to that 100%, which is the same height as what this A wave, what I'm proposing as an A wave, could travel. Alright, so let's quickly look at fib retracement from this entire level before we proceed to gold. From the high to the low. We have that 50% right there, and I know there's a lot of lines, I do apologize. We have the 50% sort of in the middle of that zone, and we also have that 61.8 higher up. So these are obviously this zone and potentially 61.8 areas to watch, where I think crude oil could move into before I think a larger move to the downside could potentially materialize. That being said, that is just sort of like my expectations, I would say, let's say over the next week, 2 weeks, potentially a month. But it could also easily happen that whatever this is turns into some sort of a triangle or sideways, very complex pattern, maybe a W zigzag, whatever the case might be. But let's just focus on what's happening right now. And for a few weeks, or for a couple of weeks now, we were saying we're expecting our prices. It does look like at least that was correct, or the expectation was correct. Gold. All right. And on gold, actually, I've got this chart that I drew for you guys. Still need to, I just didn't get a chance to do this yet. Potentially draw all of the patterns that I'm seeing, so it's easier to relate to what it is I'm talking about in the bigger picture. If you look at gold on the weekly, I still think that this was some sort of a third wave, and that this was still is some sort of correction that's potentially completed or still needs to complete. I still think low prices is still possible, although I think it's at very, very near levels that I think gold could reverse higher. But so yeah, this entire move, A, B, I think is a C, complex 3-wave move, complex 3-wave move, and then 5-wave decline, meaning that I'm still thinking that since prices topped on in August 2020, this is an expanded flat where your C waves travels in 5 waves, your A waves travels in 3 waves, and your B waves travels in 3 waves. Simply put, they're called 3-3-5 patterns. This is why I drew this little blue sort of tracing there for you guys. Now the question just is, and I've been saying for a while, I think what's happening here is that this is a 5th wave. Remember, we want to see the C wave travel in 5 waves. 1, 2, 3, 4, 5. Now, is this 5th wave over here? I hope you can see that okay. Sorry about that. Is actually, in my opinion, tracing out as an ending diagonal. 1, 2, 3, 4, and potentially ended or needs to still move lower. So let's switch back here to the black background. It's just easy on the eye. Sorry guys, I need to take a sip of water. So when you look at ending diagonals, they typically run in 3 waves, or subdivide in 3 waves. 5 waves that subdivides in 3 ways each. So each of the 5 waves move in 3 waves, if that makes sense. So you'll see that yesterday price broke and actually made new lows for the year, and now currently is reversing strongly back to the upside. Now, in my opinion here, you could see, and I think this is very clear to see, that this looks like a 3-wave move. So even if this wasn't 1, 2, like I said, a 3-wave move. Sorry guys, I don't know what's going on my throat here now. I do apologize. Then this recent move to the downside here happened to 3 waves. You would expect something like this to happen in 5 waves. All right. So I still think it is possible for gold to move lower, but now with it bouncing higher after a 3-wave move, I think that this was that final first wave lower of the final 5th, and that this is still a corrective move that will potentially take out these highs on the 26th. I'll give you that level now. Potentially move as high as this downward sloping orange trend line, which is the upper limit, or just showing the shape of what I still think is an ending diagonal, and then get that last move lower. All right, just by seeing the pattern moving into yesterday's low, a 3-wave move. I hope you guys understand what it is I'm trying to say here, but let's quickly mark things out here. Should price move higher, I think it's very close to taking out this previous high around 1,679. And I think that is now a really good possibility. Just break it, potentially making it up all the way into this white line is actually a low median line of a pitchfork at 1690. And let's mark that out as a potential resistance zone. If we look at the retracement of this entire move lower, then we got a 50% retracement and a 61.8, sort of just, well, encompassed by that zone I just drew there. Right, so should price continue higher today, maybe next week, that's an area where we could potentially see the end of corrective move and then see the final leg lower, which I don't think is complete just yet. Okay. Right, that concludes gold, and I think we quickly have time to look at the dollar index, and then I'll call it a day. Quick recap again on the dollar index. We've also, similar to what I have on crude oil, a channel that I doubled up to the upside, and this is on a weekly. And we were looking at the dollar index, assuming that price could move into the 114 to 116 sort of area. And as soon as it hit this upper channel line, we immediately had a reversal to the downside. So now the question is, was this just some sort of a corrective move? Potentially, again, an ABC, one of the most common corrective patterns that you get. And is dollar index now going to make it actually towards 116 area, because price didn't reach this upper median line of green pitchfork that I've been sloping to the upside using the three most prominent anchor points prior to this strong move to the upside that happened January 2021. So in the bigger picture, that was either the end, I think, of, well, I would say temporary end of a very strong parabolic move to the upside, or since price missed this upper median line, could still actually move into it around about 116 and then see a stronger decline all the way potentially back into the center median line of the green pitchfork and this upper channel line around about 106, 107 sort of area. Find support and then make one more high, and I think then we're going to see a much deeper correction at a much later stage. Again, we're looking at weekly time frames here. Not on all of them, but on the dollar index, sorry. So yeah, projections been working out so far. I mean, it's been very difficult to figure out whether this is now going to actually move low on the dollar index. I mean, it's not easy forecasting any sort of market, but this is why employ market geometry, want to know where these angular support and resistance areas are, and then formulate plans and projections accordingly. So a lot of these projections be working out pretty well. So now, obviously, it's the end of the week. Also approaching the end of the year very quickly as well. But from the indices side, like I said, quick recap, I think there's still potential that they could move lower into the first quarter, maybe even longer of next year. Crude oil over the near term higher. Gold, I still think, although it's bouncing now, potentially could still move lower. If that does happen, then probably you're going to see the dollar index reach this upper median line and only then give that decline that we've been waiting for. Right, guys, that's a quick summary. Thanks very much for watching. If there are any questions, please let me know. Otherwise, I'm going to call it a day. And as always, I'll be back on Monday. And if you do miss any of these sessions in the future, then go check out the recording, which is available immediately after the streaming session on YouTube and on Ninjacators YouTube channel. All right, cool. Thanks very much for watching, guys. As always, have a fantastic rest of your day. Have a great weekend, and I'll check you back on Monday again. Until next time, take care and